they'll approve or decline a loan within their credit policy. At the moment, probably because of the concentration, that is, most of the lending is falling on the back of the Big Four or funding by the Big Four, they're now wanting to control the growth within their own portfolios, and most of them are using credit policy to do that. So other banks are relaxing credit policy if they want to increase growth, and vice versa. So you can have the situation where we take a client to a particular bank one week and it's approved, and the next week it's suddenly outside their credit parameters. It's no reflection really on the credit quality of the customer themselves, but more where the bank is sitting. And I think that's going to be difficult because it's kind of unpredictable about whether the bank's sort of happy to lend this week or whether they're sort of tightening up and they want to reduce the amount of growth that they've had.
So you think this might be the strategy for the banks in 2010, not necessarily raising above the RBA official moves, but actually looking at more restrictive policies?
Yeah, I think access to credit will probably slow the market more than interest rate increases. I think most borrowers out there and most property buyers out there have factored into a few interest rate increases. I think you'd be living under a rock if you didn't think rates were going to increase. So I think that's already been considered, but it's really access to credit and how likely are they going to get this loan approved, or similarly, maybe they're not going to borrow the amount that they really want. Maybe their borrowing capacity has been reduced by lenders changing credit policies. So I think and it's kind of a good thing. We don't want the property market to go too out of control. So I think demand is quite high at the moment. And credit might actually tamper that demand. That might actually be a good thing for the property market so it doesn't go too out of control.
You've been a very vocal opponent of the Big Four banks and what you've called the abuse of market power. You've got a website, keepbankshonest.com.au. Do you feel that you're gaining traction?
I think customers can keep banks honest. I think Westpac customers sent a message to Westpac when they increased rates above the Reserve Bank quite considerably earlier this year. It was late last year. So I think customers can really drive that and almost vote with their feet, or at least vote vocally to sort of make a complaint and let them banks know when their behaviour isn't quite honest. I think we've seen the recent profit announcements and results that have told us that cash profit from retail banking has been very healthy. And having a look at the margins, the interest rate margins, it really hasn't been a bad time. They might have, their margins might have contracted by a few basis points, but certainly not as dramatic as they'll make out it to be.
If people want to vote with their feet, though, they need another option. How are you finding the smaller lenders coping in this environment? Do you think that they're getting back in the game?
They are. We've started to see a little bit of loosening in credit within the small lenders and some re-emergence there, and that's really healthy. That's fantastic. But again, because we're really relying on the Big Four funding, even a lot of those small lenders, they still sort of hold the reins there. And so again, if one of the Big Four that might be funding these small lenders decides, no, I want to curb credit growth, they can still do that by credit policy. So they still hold the strings, I guess, the purse strings towards credit growth, and so that's still my major concern.
And still to come on the program, some ground rules for small business success and the books our business leaders are reading.